Welcome back. You're watching The Money Show on ET Now. The topic that we want to discuss now is home ownership. All of us aspire to have a home of our own, but many a times affordability, cash availability and good project availability, of course, does come into the picture. Well, guess what? Two problems at least have been solved. One is with respect to affordability because prices have gone down, and the other problem in a way is also because of cash availability, because now if individuals are short of money, they can approach a bank, get a home loan, and that too they can do so at a lower interest rate. But nevertheless, should you really even stretch your finances actually to consider getting a home loan? Let's discuss all of this and more with Raj Khosla of My Money Mantra, who joins us now on the show. Mr. Khosla, thank you for joining in. So to start with, let's get in your take on home loan rates. They are at decadal lows. Do you think interest rates could stay low?
First up, it's always very nice to be with ET Now, and thank you, Mobina, for the invite. And yes, home loan interest rates are indeed at a historic low. Several banks and housing finance companies are currently offering home loan interest rates below 7%. And that's incredible, which are the lowest in the past 15 years. Kotak Mahindra Bank is offering home loan rates starting from 6.75%, while other top lenders like State Bank of India, HDFC Limited and ICICI Bank are also offering home loan rates starting from 6.9%. This is really Christmas coming early, if you ask me. But in the current scenario, home loan rates will continue to remain at low levels, I think, for eligible and qualified borrowers, that is, especially those who have a credit score higher than 800. Banks have enough liquidity and CASA balances and also with the RBI's constant push for liquidity. Look at the current monetary policy, it's so easy. So a check on inflation and the lowest repo rates, conditions will remain conducive for offering affordable loans to home buyers of both small and big ticket borrowers. So good times are here to stay as far as rates of interest are concerned.
Mr. Khosla, though, while we see a lot of ads and noise around these really low rates, starting at 6.75 and 6.9, explain to our viewers why when these people go to a bank to get a home loan, they're not really going to get offered 6.9 and 6.75.
Well, you're right there, but you see, in their advertisements, lenders advertise lowest rates of interest. These rates are available to select borrowers who meet the lender's eligibility guidelines. Should be aware about the caveats attached to advertised rates of interest. The eligibility will be assessed basis the applicant's age, gender, income, type of occupation or business or profession, credit score, property value, location, city, and project-specific caveats. A particular project, maybe the builder is giving a discount on rates of interest. So all of these conditions may not be, and frankly cannot be, highlighted in any one advertisement, and thus a customer develops a complete understanding only after a sufficiently deep dive. But generally speaking, lowest rates of interest on home loans are offered to women applicants and salaried individuals with a stable income source and a high credit score. Furthermore, size of loan and value of property could be other factors which can determine the final rate.
So, Mr. Gupta, the second question now is, while it's always desirable to have a home of your own, to what extent should individuals really squeeze their finances, their budget, to accommodate a new home, because like I said, right, prices are very mouth-watering, interest rates are mouth-watering. So, Mr. Khosla, to what extent do you think individuals should, stretch themselves on the financial front?
Well, you see, with lowest home loan interest rates ever and reduced realty prices, this is the best time to buy home for self-use. And in fact, as far as stretching is concerned, I don't think an EMI should, the monthly payments, for servicing an EMI should ever, be more than 40 to 50% of your take-home income. And as such, that is the limit that one should definitely keep in mind before actually going all out and borrowing.
And under what circumstances do you think that investors should not stretch their finances? Because at the end of the day, we are still living in, well, fairly precarious times. Yes, a vaccine has come, but it's not yet in our hands. So do you think that we should be, what category of individuals do you think should still play it a little safe?
Well, this is really, like I was mentioning earlier, the ideal time to buy real estate for self-occupation. See, given the turbulence and not knowing when this turbulence will end, I would not advise any speculative activity. Despite low rates of interest and best terms available for purchase of real estate, I would not recommend you to take the risk of shouldering an additional EMI in the hope of a lucrative rental or possibly rapid appreciation in property prices. So that is something to look out for. But if it was only, whether it was for self-occupation, and it could be a dream home, it could be commercial space, it could be office space, as long as you're substituting a rental outgo with an EMI outgo, it's always a good idea. So for self-occupation, please go right on ahead. Otherwise, don't let hubris get the better of you. If you're getting cheap property prices and cheap rates of interest and say, okay, maybe I'll stretch myself in the hope of something going on the uptick very soon. That possibly is something I wouldn't recommend, no.
All right. Okay. Well, Mr. Khosla, thank you so much for joining us today on ET Now, and I hope it's given some sort of guidance as well to those viewers. Yes, very mouth-watering prices and interest rates as well, but I guess sometimes it's best that at the end of the day, of course, there's a lot of risk involved over here. So don't consider investing in a property, from an investment perspective, because appreciation at this point of time is a little low. We know yields as well are not that great, rental yields. But yeah, if it is for self-occupation, whether it's for a home or an office or any other commercial, purpose, then perhaps it's not such a bad idea because prices are definitely very attractive. That's what Mr. Raj Khosla as well has said. If you want to go back and listen to this conversation, like I always say, you can always go onto ET Now's YouTube channel and find it under the Money Show playlist. For now, a very short break, but we'll be taking forward this entire conversation on real estate, on the most lucrative offers, and more when we return. So don't go anywhere.